2019 was a turbulent period for the Indian economy, with retail inflation jumping to a 3-year high and GDP growth slumping to a 6-year low. The government swung into action with a series of policy reforms such as reduction of interest rates, reduction of GST rates, and setting up of a distress fund to help developers complete unfinished residential real estate projects. These actions will collectively have a positive impact on the industry and will bring in the much needed support for the sector. With developers focusing on delivery of already launched projects, new launches of residential units decreased by 14% on a year-on-year basis across top 7 cities. Mumbai and Bengaluru contributed more than 60% of the overall launches, while affordable and mid segments accounted for 55% of new launches. Another big reason for this dip was NBFCs degrowing their wholesale lending books, affecting developer liquidity. This also led to developers adopting a cautious stance in launching new projects. Despite sluggishness, most branded and corporate developers sailed through 2019 with healthy balance sheets, registering strong sales and successful project launches. We expect the residential segment to witness further consolidation, and joint developments will continue to be a major trend. Brand reputation, strength of the balance sheet, right pricing, and timely delivery will define future winners. Going ahead, new launches across the 7 cities are expected to remain modest as developers realign their product mix to suit market demand, face weak consumer sentiments, and overcome liquidity challenges. On the sales front, the sales of residential units increased by 6% in the current year. While the first 6 months of 2019 witnessed a substantial jump in sales by 22% on a year-on-year basis, second half 2019 recorded a 9% dip. Hyderabad and Mumbai witnessed maximum growth in sales. The removal of the subvention scheme also had an impact on sales in some parts of the country. Rationalization in launches combined with modest growth in sales led to a decline of unsold inventory by 2%. Prices in some markets will rationalize, with lenders putting pressure on residential developers to offload unsold inventory. Hyderabad recorded a price increase of 9%, while other cities witnessing a price increase between 1 to 4%, and Bengaluru recorded a decline of 2%. Going forward, affordable housing is expected to see positive sales momentum. Also, evolving segments such as co-living and student housing are increasingly attracting investors. We can safely say that the worst period for the sector is now over. The surge in sales will primarily hinge on consumer confidence, which in turn depends upon the effective implementation of progressive government policies and economic growth registering a comeback.